Did you know that Tesla stockholders received a final warning from Chamath Palihapitiya? Many of the EV company's investors have been uneasy all of the time lately, especially after the price took a tumble. Remember to keep an eye out for more information regarding Chamath Palihapitiya's warning. Since the COVID-19 pandemic ravaged the world, the price of several firm stocks has fluctuated dramatically. Naturally, stock market fluctuations are common, but recently, these fluctuations have been significant because of the pandemic that has impacted the global economy. You will learn today what the final cautionary note from Chamath Palihapitiya to Tesla shareholders is. Among other things, Tesla is a sustainable energy corporation that makes electric cars, or EVs. Despite the fact that many large automakers have entered the EV market or have declared their intention to enter it, Tesla continues to lead the field. Many investors and analysts, like Chamath Palihapitiya, support this claim. Why should you pay attention to Chamath Palihapitiya, and who is he? Originally from Sri Lanka, Chamath Palihapitiya is a Canadian and American venture capitalist, engineer, SPAC sponsor, and the founder and CEO of Social Capital. From 2007 to 2011, he worked as an early senior executive at Facebook. He is the CEO and creator of Social Capital, according to CNBC, whose goal is to improve society by finding solutions to the most difficult issues facing the planet. Palihapitiya is placed 2378 on Forbes' list of billionaires 2021, with an estimated net worth of about $1.2 billion as of April 2024. Social Capital was established to make investments in businesses in industries including health, finance, and education that other venture capitalists were passing over. Since then, the business has grown to include investments in internet startups, including Slack, Tesla, and Amazon. Palihapitiya recently said that the stock of Tesla has a promising future and will likely double or even triple in value. Even still, he can't deny that the economy isn't doing well right now, even though he supports Tesla. Indeed, analysts claim that a recession is almost certain in the United States. The United States is already in a recession, even though the Federal Reserve has not yet declared it, claims Cathie Wood, an American investor and star stock picker. She is also the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that makes investments in cutting-edge technologies like genomics and self-driving cars. According to Palihapitiya, the thing that you have to do before you talk about what is happening now, I think is probably useful to go back and start at the end of the Great Financial Crisis. The reason for this is that many individuals were perplexed about the actions of the US government and certain European governments after the Great Financial Crisis. The time between mid-2007 and early 2009, when global financial markets and banking systems were under tremendous strain, is known as the Global Financial Crisis, or GFC. He claimed that because there was a chance of a severe financial crisis at the time, the U.S. intervened and the Fed began purchasing toxic assets with funds from its balance sheet. The Federal Reserve Act, passed on December 23, 1913, established the Federal Reserve System, also known as the Fed, as the nation's central banking institution. The Fed was established in response to a number of financial panics that prompted the need for central bank control over the monetary system in order to prevent future financial crises. Accordingly, numerous countries adopted it, and subsequently, a group of individuals developed the modern monetary theory, which essentially says, hey, you can keep printing money and introducing it into the economy to smooth things out and to drive long-term growth. Modern monetary theory, also known as modern money theory, MMT, is a heterodox macroeconomic theory that, by definition, views the currency as a public monopoly and views unemployment as proof that the owner of the currency is unduly restricting the availability of the financial assets required to meet savings goals and pay taxes. According to this idea, concerns over growing debt should not be used as a reason to limit government spending. As it happened, a number of government officials were duped by it. The opportunity cost and distributional effects of the central bank's monetization of deficits, such as how it affects asset prices, are not addressed by MMT, though, and they could have an impact on the economy's supply and demand sides, as well as the inflation constraint before full employment is achieved. Palihapitiya stated, leading up to 2022, governments globally printed between $30 and $35 trillion worth of money that shouldn't have been in the economy, so 14 years later. Therefore, it's important to keep in mind that although we have been discussing recession and inflation for the past 6 or 8 months, we haven't always been hiding the real supply. In actuality, we have been doing it since 2008. Simply put, it has been accumulating within the system. He contends that in order to achieve a true economic balance, individuals must come to the realization that all of that money must ultimately be destroyed. In the absence of the government throwing money around attempting to prop up things that shouldn't be propped up or buying votes, he continued all the grifts that these people had engaged in over the previous 15 years had to be undone. Do you genuinely believe a recession is about to hit the United States? If so, what impact will it have on Tesla stock prices? Post your ideas in the space provided for comments below. How will the recession impact Tesla stock and its investors if the United States is in fact experiencing one? Many, particularly in the business community, had been anticipating that after 2 years of disruption due to the COVID-19 epidemic, the U.S. economy would finally return to normal in 2022. They might be really disappointed, though. Disruptions to supply chains, the crisis in Ukraine, increased prices, and interest rates are creating a sense that the U.S. economy is headed towards a recession today. A recession, what is it? An economic recession can be defined in a variety of ways, but analysts and investors typically use the term 2 consecutive quarters of negative gross domestic product, GDP, to describe it. The first quarter of 2022 saw a 1.6% decline in the United States GDP, and the Atlanta GDP Now model currently predicts a further 1.2% decline in the same amount in the second quarter. The essential term in the NBER's definition of a recession as of now in 2022, according to Chief Economist Jeffrey Roach of LPL Financial, may be significant. According to Roach, a downturn must be substantial, widespread, and long-lasting in order to be classified as a recession. Although the economy is currently moving towards a considerably slower growth path, we do not believe that this represents a significant drop in economic activity. Investors shouldn't freak out if the United States does into a recession in the second half of 2022 or 2023. In the past, recessions have not lasted very long. Since World War II, the average length of a U.S. recession has been just 11.1 months, and the COVID-19 recession that began in early 2020 lasted for just 2 months. Recessions in the United States are also rather regular. Since World War II, there has been practically one recession in the country almost every 5 years. Recessions have historically provided long-term investors with great purchasing opportunities, despite the fact that they can cause job losses and other financial difficulties for Americans. Timing a market bottom accurately may be quite challenging for investors, and stocks often bottom many months prior to a recession when peak pessimism is achieved.